Hello everyone, I am Pratap here. We are at lesson 29.6. This is about how to use NeoStock Software generated BANKNIFTY supply demand zone chain reports. In the previous lesson, that is lesson 29.5, I already explained how to use NeoStock Software generated Nifty supply demand zone chain reports. Some of the important points I already explained in the previous video, but they are reused in this video. I will not be explaining because I want to make this video as much less as possible, because previous video is a very big video, almost 3 hours. But I don't want to make this video such a lengthy video. So because you might have already completed the previous video before you get into this lesson, so I want to avoid some of the topics I explained in the previous video. In case if you did not listen the previous video, I request you complete that video first and then get into this video. And also, this training lesson is having dependency on the earlier lessons. Suppose if you are your first visit to our channel, if you did not complete the earlier training lessons, please note we are providing complete free training on supply demand zone price action. You can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, you click on the tab playlist. Click on the playlist. You have different playlists, Q&A playlist, supply demand zone price action course playlist, and this is the playlist you should focus. And we are also having some other playlists like important strategies and analysis videos playlist. After completing the training lessons, you can focus on this. This playlist will be helpful. Mainly people who are traders who are completed supply demand zone price action course, our free training course, and want to gain more experience, they can focus on this playlist and they can attend these video lessons. So you should focus on supply demand zone price action course playlist. Click on this view full playlist. Now we are into supply demand zone price action course playlist. I kept all the training lessons in this playlist. Before recording this video, we have completed lesson 29.5. This is about how to analyze Nifty supply demand zone chain. The similar kind of training lesson, but specific to BANKNIFTY. So scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to the training instructions I mentioned at our Telegram channel. You must learn the course according to my training instructions, but they are available at our Telegram channel. I provided the link to our Telegram channel in this video description. So go to the video description, join at our Telegram channel. At the Telegram channel, top of the window, you can find pinned messages. Go to the pinned messages. There one of the messages are having all the training instructions. Learn this course according to the training instructions. Complete all the training lessons and then you get into lesson 29.6. So this is what lesson 29.6. We are going to focus on BANKNIFTY supply demand zone chain. Excuse me. Okay. So this is a BANKNIFTY chart, monthly chart. So monthly chart, let us identify supply demand zone chain. In NeoStock supply demand zone chain, I have selected the monthly time frame. And I have given the script name as Nifty Bank. That is nothing but BANKNIFTY. And by clicking this SDZ chain, supply demand zone chain, I am generating the complete report for monthly time frame. Previous video I explained all these columns, how to understand these columns. Please learn those concepts from previous lesson, Nifty supply demand zone chain report. Now directly I will go to these zones. The first immediately available monthly zone, look into the leg-in timestamp. This is the first January 2024, after the 2 base candles, and then after that you have a leg out candle. So this is a monthly chart. Here you see 1st January 2024, this is a drop candle. You have 2 base candles and then you have a rally candle. So here I am drawing the zone. This is monthly demand zone. This monthly zone is also having monthly EMA confluence. Of course, it is a little above, but that is okay. This monthly zone is having monthly EMA confluence. See, recently prices came down and EMA price hour extension is completed. Earlier prices were moving away from the EMA. See, all these candles, here somewhat they came close, but most of the candles here also somewhat came close, but after that sharply moved up, maintained price hour extension. That price hour extension is completed recently, the moment they reached this monthly demand zone. After price hour extension complete, see, within this month what happened? Bank Nifty was started moving up. We have seen a bullish candle. Okay. So this is what you should observe from monthly time frame. So what else? Here, let me draw a horizontal line to understand where monthly EMA is there, so that next time frames we can remember. Somewhere here monthly EMA is there. This is a monthly EMA 20. MEMA 20 means monthly EMA 20. A little above. Okay. Fine. Now let's move on to the next time frame, weekly. And did you observe any supply zones? No. This is the all-time high monthly demand zone. This is the point. If a supply zone is not there, then the demand zone, the immediately available demand zone, is called as all-time high demand zone. So this is at monthly all-time high demand zone. Now let's move on to the weekly time frame. Let us identify the weekly zones. So I am going back and changing the time frame to weekly and generating weekly supply demand zone chain. So weekly supply demand zone chain, here we have immediately available demand zone. This is a high liquidity demand zone and this is a pierced supply zone. We have both the zones are there. Before we draw, one thing we have to, one text we have to add here. This is a monthly demand zone. This is a normal demand zones. That's why I am not using the word HLQ. Okay. Now we are in the weekly time frame. So immediately available weekly demand zone is a high liquidity zone. Let us draw this. When this zone was created, 10 to 2025, after that 4 base candles. 10th February 2025. This is the one, 10th February 2025. After that 1, 2, 3, 4 base candles and then a rally candle. And this week we have with the hidden body, we have a follow through candle is also there. So this is the weekly demand zone. And this weekly demand zone is a high liquidity demand zone. This weekly demand zone is also, but now confluence, EMA confluence is changed. Earlier almost it is having a weekly EMA, but now it is started moving from this zone. So EMA confluence we can't expect. Let me draw a horizontal line, and this is a weekly EMA confluence. I mean weekly EMA 20, not EMA confluence, EMA 20. EMA confluence means EMA having a overlapped with weekly zone. But this is the EMA line. Okay. See, here we have a monthly EMA line, and then here we have weekly EMA line. And here also you see, prices almost came. Now weekly EMA, all these days prices were below the weekly EMA. Now EMA went beyond this. Now prices are started moving up above the weekly EMA. Now probably overextension is getting started now towards the upside. The bullish overextension is getting started now. So probably for some more weeks, if prices are moving, you can see price overextension on weekly time frame also. So these are some observations you can make from weekly, but we should also draw weekly supply zone. Here we have rally base drop is there. But here we have a PRs supply zone, our software identified. What is that? 16/12/2024, 2 base candles. This is the one. Yes. Oh, very interesting. This is a weekly supply zone. So weekly pierced supply zone. Here you have a rally base drop, and also here you have a rally. Both are LOTL zones. These two are LOTL zones. So I have drawn all the weekly supply zones. Okay. It's better to draw one more supply zone, demand zone also below. It would be good, right? So the one below is also high liquidity zone, the weekly zone. When it was created on 11th March 2024. Where is 11th March? This is the one, 11th March 2024, 2 base candles are here and a rally candle, right? Yes, 2 base candles and a rally candle. Drop base rally. Let me draw that zone. This is weekly demand zone. Let me add the text. This is weekly HLQ demand zone. Okay, this is what you are seeing on the weekly time frame. In case if the first one is violated, next one we get support. And this is already pierced. Maybe in the next week, suppose market continues, suppose if it rallies, what will happen? This zone may violate completely because it is just pierced. There are two possibilities. There could be some trap might be there above this zone that you can identify in the lower time frame zones. Our bank nifty supply demand zone chain analysis will help us Now identifying any traps here. Maybe there could be a bull trap above this supply zone that you may identify in lower time frames, maybe daily or maybe 75 minutes or maybe 15 minutes or maybe 5 minutes. One of these time frames, definitely you will identify the trap above the weekly zone. If once the trap is violated, then at the time prices may go and close inside this weekly supply zone. At the time this weekly supply zone may completely violate. That is one possibility. Another possibility, this trap, from this trap, again market is going down and it is pushing up to the weekly demand zone. If that is the case, a new order flows will be created within this zone. And in the coming days, those new order flows will work very effectively. So if that is the case, few weeks probably prices will be moving between this pierced supply zone and this high liquidity zone. Suppose if this high liquidity zone is violated, the next high liquidity zone, the one below, and this pierced zone, in between prices will be moving. But this is only a future. Possibilities we are discussing. It may not happen in the immediate future. It may take several weeks' time to observe such kind of actions. Immediate possibility, one possibility could be if prices, maybe next week prices goes and price close inside the zone, this entire weekly pierced zone will go away. No more it is a pierced zone once the candle closes, weekly candle closes outside the zone. But this week weekly candle closed inside the zone. That's why we are saying it is a pierced zone. That's why we will be in a position to identify a trap above this weekly supply zone when we continue our analysis. Okay, this is about weekly time frame observations. Now let's move on to the daily time frame. Changing the time frame to daily. Now let us generate daily supply demand zone chain, changing the time frame to daily and generating daily supply demand zone chain for Bank Nifty. So this is a daily supply demand zone chain. So this is the immediately available daily supply zone. We have two daily supply zones are available. This is immediately available daily demand zone. Sorry for my mistake. I pronounced supply zone. Actually it is a demand zone. So the immediately available demand zone is a daily high liquidity demand zone. Below we have another, but it is a pierced demand zone. See, already pierced twice. Maybe below this zone some traps might be available. Okay, first let us draw this demand zone, high liquidity demand zone, and a fresh zone when it was created on 11/3/2025. So this is 11/3/2025. Generally, people who are not aware of hidden body and hidden zone concepts, they will be thinking it is a base candle, right? But see how effectively we are identifying, how effectively our software identified this zone. Many people are not aware of hidden body and hidden zone concepts, especially supply demand zone traders. Many of them may not be knowing this concept. But we learned this concept, from the previous close here to till here, there is a hidden body is added. That way this is a drop candle. These three are base candles and a rally candle. You may see this is again a base candle, but it is not a base candle, right? At the hidden body, if you had the hidden body, this is again a rally candle. So rally, 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 rally. Now rally, base. Now what is going to happen? Very interesting. Now is it going to create a drop candle or is it going to create a rally candle? So next week price direction on Bank Nifty is going to be very interesting. If it is a rally candle, and probably we can expect bullishness because this rally base rally may support good order flow in the coming days. Or another possibility, drop candle. At the time, what will happen? A rally based drop, that means a new order flow is created within the pierced zone. Those order flows might be very strong. A third possibility, maybe on Monday, one more base candle might be there. That possibility is also there, right? We can't rule out that. Okay. But at present, this is the immediately, and this is having a zone confluence with weekly time frame. Already monthly zone confluence, we have a monthly zone. Inside the monthly, we have a weekly zone. Now you see this drop base rally is there inside the monthly zone, and also it is there inside the weekly zone. That means daily zone is having confluence with monthly time frame and also having confluence with weekly time frame. That means this daily zone is a fine-tuned zone inside monthly and inside weekly. That way you have to, first let us draw the zone. And because this is the drop candle, lowest wick of the drop, lowest wick of the base, lowest wick of the leg out, whichever is the lowest, that will be considered. Here the leg in is the lowest. This drop candle leg in, this is the lowest. So that is the reason why you have to draw the zone like this until the leg out candle distal line, leg in candle distal line. This is the demand zone, daily demand zone. And this daily demand zone is the high liquidity demand zone. Okay, one more demand zone we will draw, because the next one is also high liquidity. But it is a pierced demand zone. Maybe this pierced demand zone may help us identifying some traps. When it was created on 26th March 2024, one base candle. (26/3). This is the one. This is a failed ERC candle as considered big. This is a large candle considered as a leg-in. You have a base, but this high liquidity zone again overlapped with this newly created daily high liquidity zone. So that's the reason why there is no need to draw this zone. This drop base rally is not required because it is inside this zone only. But below that there could be another zone. This is a 28/2/2024. February 2024. 28th February means somewhere here. Let us check. This is the one. 28th February, one base candle rally, drop base rally. This is the one base candle. And 1/3/24. See, this is the beauty of this concept, you see. Very interesting point. What is this concept? Okay, this is looking like a normal demand zone, but actually it is not a normal demand zone. Sorry, color is changed. Daily demand zone. This is not a normal demand zone. Why it is not a normal demand zone? See, this is a weekly demand zone. For this weekly demand zone, we have a drop base rally. What kind of concept it is? Recall our previous concepts. The new concept that I developed. Lesson 22 concept. Lower time frame zone as an horizon to the higher time frame zone. What is the lower time frame zone? This is drop base rally. What is the higher time frame zone? This is weekly high liquidity demand zone. This weekly high liquidity demand zone picked up the orders from this zone, drop base rally. It is looking like a normal demand zone only, but it is a very powerful concept, lower time frame zone as an horizon to the higher time frame zone. How powerful it is, can you imagine? This candle will tell you, this drop candle will tell you when it happened on the elections declaration day, results declaration day. That is the 4th June 2024. On the day, market crashed more than 1,000 points on the day. And Bank Nifty, how many points it was down? 4,000 points, 7.95% down. Bank Nifty. See here, in this here, when I place my mouse on this candle, observe here. Okay, now you observe there. Now you are seeing minus 4051. That means 4,000 points down. That is 7.95%. But where it took the support? It took the support on this demand zone. What kind of demand zone it is? It is a lower time frame zone as an horizon to the higher time frame zone. From this horizon it picked up the orders. And see the rally after that? How market rallied? So this is the reasons why we are drawing even the demand zones below that. We didn't ignore this is a normal demand zone. If you would have ignored it is a normal demand zone, and if you did not draw this zone on your chart, you might have missed identifying this demand zone as a lower time frame zone horizon. Why this is not violated? Because it is having such a great order flow in this. The whole crash that happened on that day, this is the area it stopped. And after that again market rallied. If you would have drawn this zone before 4th June, probably 4th June you might have taken a trade in this area, because you already know the importance of lesson 22 concept, how powerful it is. How much profit you would have gained, can you imagine? See, from here to here itself, around 4,000 points. Till this area, probably 8,000 points move you might have captured. And fourth, if you would have taken a trade in this zone, probably around 8,000 points on 3rd July, within 1 month. Within 1 month, 8,000 points you might have captured in Bank Nifty. Can you imagine how much profit it could be, 8,000 points in Bank Nifty? How much profit you would have gained in Bank Nifty within 1 month? Imagine one future, if you would have purchased, what could be the profit? Of course, if you are an options buyer, probably you can't imagine the profit. How huge it was supposed to be. Okay. Good. And below that there is a high liquidity zone is there. When it is, this is on 17/11/2023. 6 base candles. (17/11/2023). Maybe somewhere here below this zone. Anyway, it is below this monthly zone. Let's draw such kind of analysis in future. But now this is good enough for us. Okay. And we have drawn, what about supply zones? We didn't draw supply zones, right? Let us draw the supply zones. We have 2 supply zones. When it was created on 24th March 2025, 1 base candle. This is the one. 24th March and leg out on 26th March. Rally base drop, rally base drop. So already they created a supply zone. Daily supply zone. And how powerful this supply zone, only we know only on next week, coming week only. Coming week, if this zone is violated, okay, fine. We know that this is a zone not having, but if coming zone again it pushes the prices down, maybe LOTL zone might be created. Again rally base drop, that indicates this zone may act as a high liquidity zone. That way we can assume at least 80% scenarios. We can't confirm 100% because at present this zone is a normal zone. Maybe in future our software may identify, depending on the price action here, it may recognize as a high liquidity zone. But as on today, it is a normal zone. If it is a normal zone, we don't know what is going to happen. It might be violated or more liquidity add in this area. In future, it will be converted to high liquidity zone. Okay. And what is the second high liquidity zone? This is the one. We have only two daily supply zones. Sorry, not high liquidity zone. Some wrong words are pronunciations are coming from my mouth. Sorry. This is not a high liquidity zone. This is a just daily supply zone. So this is on 13/12/2024, 13th December 2024, one base candle, rally based drop. 13/12/2024, is it the one? Yes. See here, failed ERC as a rally candle, base candle and drop candle with small hidden body also is added here. Drop and then drop follow through and one more follow through with hidden body. This is not a base candle. And one more drop candle. So this is also a daily supply zone. This daily is overlapped with weekly supply zone. There is one more LOTL weekly supply zone here. So this supply zone is also overlapped with the top one at the proximal line. See the first proximal line only, it took the support and the zone created. And because of this daily zone and prices came down and this entire weekly formation is completed. That means obviously this is the area some strong order flow will be there within this daily supply zone area. Okay, at present we have these two daily supply zones. And where is daily EMA? Here. Daily EMA is here. And if you look into the current prices, there is a price overextension at the daily time frame. See, prices moved away from the EMA. The prices, daily EMA. Of course, it has to complete overextension at some time. But before that, is it the end of the overextension or is it going to move further up? And overextension will be continued? We may not be knowing. But as only one thing we know, there is a overextension. And also, did you observe? This daily EMA is also at the weekly EMA. Daily and weekly EMAs are same now. See, exactly here only we have weekly EMA. Interesting, right? Okay. So this is the daily time frame. We have drawn the zones. And the next, what is the next time frame? 125 minutes. 125 we focus only high liquidity zones. 75 minutes we draw the zones, normal zones. 125 any high liquidity. Here we have a high liquidity supply zone is there. When it was created on 27/9/2024. 27/9. This is a 25th/9. This is 30. 27/9. Sorry, we are in the daily time frame. I'm sorry, I didn't change the chart. Okay, now I am changing the time frame to 125 minutes. I'm looking in a wrong chart. This is the one, 29. This is 13th December. Probably this is the one. 27/9/2024, 11:20. Is it 11:20? Yes. One base candle and 39/915. This is 39/915 with the hidden body. Pro gap is there. So this is a high liquidity zone. 125 minutes high liquidity zone. which is inside the daily zone. Okay, I got 125 in supply zone. Okay. Almost from there only this daily zone is created. Next, high liquidity demand zone is there, but it is a PR's demand zone. And one more high liquidity demand zone very far away, is it? 5/6/2024 9:15. This is the one, 5/6/2024 9:15. This is the failed ERC as a rally candle, base candle and rally candle. This is the 125 minutes high liquidity zone. Recently, what happened? See, prices, what happened? Prices get into this 125 minutes area and the daily zone is created and prices started moving up. See, already tested first time and moved here. Second time again moved up. Third time again moved up. Did you notice one interesting thing here? First time it moved, came down, and again higher high has given. Again third time, okay, initially it gave a small move again, and here even higher high it has given. Very interesting. And this 125 minutes high liquidity demand zone is the origin for this entire weekly demand zone. See, this entire weekly zone picked up the orders from this zone. Not only that, even this daily zone also. This daily zone also picked up the orders from this 125 minutes high liquidity zone and moved up. Maybe within this area there could be some 75 minute zone might be there. We will see later. Okay. This is 125 minutes. Now let's move on to 75 minutes time frame. Okay, this is the 75 minutes supply demand zone chain. What is the nearest demand zone here? This is the nearest demand zone and this is the nearest supply zone. The immediately available nearest supply zone is a high liquidity supply zone. First, let us draw the supply zone. The 18, 12, 9, 15, after that 4 base candles. (18, 12). This is 17, maybe somewhere here. 18, 12, 9, 15, after the 2 base candles, then with the hidden body, there is a big drop candle. But it is showing 4 base candles. Sorry, we are at 125 minutes time frame. I am changing the time frame to 75 minutes. Okay, now let's observe. This is the one. Drop 1, 2, 3, 4. But these all 4 base candles together is a 125 minutes zone. But it is a 75. 125 is a normal zone, but 75 minutes we identified. This is actually a high liquidity zone. 75 minutes high liquidity zones are having a lot of significance. We have our HLQ zone strategy built based on 75 minutes and daily time frames, right? Okay, so this is a 75 minutes supply zone. This is a high liquidity zone. So this is the immediately available. And from that 75 minutes, this is the reason behind piercing the weekly zone. This weekly zone is a pierced supply zone, right? I told you, we will identify traps in the lower time frame. The trap is 75 minutes high liquidity supply zone. See how cleverly institutions are creating their order flows. They kept a 75 minutes high liquidity zone just above the weekly zone. And then they created the weekly zone. And now here, recently what happened? Recently means when this is on 25th March, 2 days back. Or maybe 4 days back, right? 4 days back, prices entered into the 75 minute zone. And from there it came down. While coming down, institutions used this 75 minute zone as an horizon and created this daily supply zone. For this daily supply zone, this 75 minutes HLQ supply zone is the horizon. See the beauty of the zone creations. How institutions are using these zones as an horizon and creating the new zones. That's why our lesson 22 is a very powerful concept. How many profits we give in the recent time? Last 2-3 months, the not 75 minutes, the lower time frame zone horizon has given huge profits. Our daily 75 minutes HLQ zone strategy trades. Of course, they are intraday trades, daily and 75 minutes, but they gave you huge ROIs. Of course, this concept also can be used in swing trading. There is no rule that the lower time frame horizon you have to use only in intraday. No, there is no such rule. Because intraday, every day I am tracking the data. It's not the intraday. Actually, intraday is a wrong word. I have to say HLQ zone strategy. That is the right word. But we are using that strategy only intraday. The reason is HLQ zone strategy is giving profits related to short-term trading. Short-term trading means 3 to 5 days. 3 to 5 days, what is the profit you get? Same profit we are getting in intraday. That's why HLQ zones are always giving big profits. Okay, now let's don't deviate. Let's get into our main topic. So this 75 minute zone now acting as a horizon for this entire daily zone. Not only that, this 75 minute supply zone acted as a bull trap for this weekly zone. Weekly zone is pierced. Now it picked up the orders from the 70C in this candle. And then prices sharply came down. This has happened on Tuesday. On Tuesday, it would have given you very good profit. After that, it further continued. Until 26th March, it gave you big profit. Now again, drop base rally they created, 75 minutes demand zone. And again push. Now price is inside this daily supply zone. Okay. This is the high liquidity, not high liquidity, high liquidity only, yes. This is the high liquidity supply zone. And what is the next supply zone? This is on 17, 12, 13 hours. (17, 12, 2024, 13 hours. Yeah, just above there is one more zone, 75-minute zone. You may ask a question, why I am drawing all these normal zones also? Because inside 75 there could be some high priority, high liquidity zones might be there. Maybe 5 minutes or 15 minutes. At the time, if those zones are there within these zones, we know they have a zone confluence. Zone confluence is there, the strategy might be having more higher success rate. Okay. This is just a 75-minute supply zone. And above that there is one more supply zone. This is on 13, 12, 14, 15. What is this? 13, 12. Okay, 14, 15. This is the one. 13, 12, 14, 15. After that, 1, 2, 3, 4, 5 base candles. And then drop candle. So that means the same entire zone is not only daily, it is also 75 minutes supply zone. The point we have to understand, 75 and daily both are almost same. Okay. So I am not disturbing this structure. The next one is 27/9/2024. 13 hours. What? 27/9, sorry, it's not 12. 27/9. This is 13 hours. One base candle, drop candle. That means the 75 minutes HLQ supply zone and the 75 minutes supply zone almost same, but slightly risk might have been reduced. So that's why what I do, same thing, I will keep 75 minutes supply zone. They are almost same, both. Okay. And one more is there, the last one, 26/9/14/15. 26/9/14/15. So we have a drop, two base candles and a drop. This is failed ERC as a drop. See, software has given drop based drop. Two base candle, 27/9/14/15. This is 27/9/14/15. So this is again another 75 minutes supply zone. Good. So inside a weekly zone we have these zones, but there is no daily zone here. Okay. So we have completed 75 minutes time frame drawing the zones. And what is the next time frame? Next time frame is 25 minutes. So 25 minutes we will focus only high liquidity zones. These 25 minutes high liquidity zones are not for direct trading. Maybe if it is having a fine-tuned 5-minute zone, you can plan intraday related trades or maybe short-term trades. What is the immediately available demand zone? The 9th one. 11th, you have a high liquidity zone. And immediately available 25 minutes is a high liquidity supply zone. First we will complete the high liquidity supply zones, because so many high liquidity 25 minute supply zones are here. 1, 2, 3, 4, 5, 6 are there. They are immediate to each other, many of these zones. Here you have 11th high liquidity demand zone. After that 16th and 17th are high liquidity demand zones. Okay, 8th, 26.3, 940. 26.3. Sorry, we are in 75 minutes time frame. Okay, I'm changing the time frame to 25. Your time frame is 25 only, right? Yeah, 25 minutes. What is the timestamp? 26.3, 940. 2 base candles. This is 21. 26th March. This is the one. We have a rally. You have these 2 base candles and a drop candle. 10:55. You may say this is a very big candle. Yes, because what I did for 15 minutes and 25 minutes, 15 minutes and 5 minutes, for all the 3 time frames, I have given bigger ranges. See, now the moment I reduced the zoom, they are okay, right? Both these candles. Anyway, rally, 2 base candles and a drop. See, because it is a high liquidity zone, see how it is supported, how many tests it was so far. 4 times it is tested. So after that, after the zone creation, that means the whole Thursday and Friday, this zone holded the bank nifty moving further, going up. Did you notice here? So this is a 25 min HLQ supply zone. Suppose if anybody would have planned how you plan inside 25, you need to fine tune with 5 minutes. Okay, I am going to 5 minutes. Again, I will come back to 25 minutes. Just I want to show you here. Is it having a fine tuned zone? Yes. It is having a rally base drop is there. Fine-tuned 5 min supply zone. Maybe this could be high liquidity zone or a normal zone, we don't know. But as of now, it is a fine-tuned. Fine-tuned zone, you can plan the trades. Similarly, here also a drop, 1, 2, 3 base candles and a drop. This is also you could have drawn a zone. See, first this is the zone supported. Slowly moved up. And finally, you see here, it picked up the orders from this. This is violated here. Picked up the orders. See how sharply it moved down. It would have given you a very good intraday profit here. Not only that, again rally base drop, follow through candles. And maybe because of this LOTL scenario, this time they didn't go very deep into this zone. From this area only, it picked up the orders and again came down. Hope you understand, right? See again, third time. Again prices entered. Once again sharply it came down. Now this is completely, this one is completely violated now. because candles closed outside the zone. And if you see this fine-tuned zones point of view, already it gave you two good trades. This is the first one and this is the second one. This is the closing hours of the Friday. And this one at the early hours of the Friday. Morning 9:25 minutes candle, it gave you the trade and sharply it gave you. How you would have identified these order flows? With the help of supply-demand zone chain. You have already seen how supply-demand zone chain order flows are helping us to plan the trades. Especially for the intraday traders, see how sharply you are getting profits in BANKNIFTY. So this is how you have to fine-tune. Okay, time being, I will delete this 5-minute zone. Let's focus on 25 minutes. I'm going back to 25 minutes. This is the reason why I am drawing high liquidity zones from 25 minutes time frame. The reason why I am drawing, because I need to fine-tune 25 minutes with 5 minutes time frame. Because 5 minutes time frame to 25 minutes time frame, you have 5 minutes candles are there. 5 minutes candles are allowed. You already land 3 to 5 candles is an ideal scenario between two time frames. Between two immediate time frames, that is the right word. Okay, this is the high liquidity. Above that you have one more high liquidity zone, 25 minute zone, when it was created on 25th 3/10:30, 25 3/10:30, one base candle. This is 26/3, 25 3/10:30. Here 25/3 LOTL zones. Both are LOTL. Both are high liquidity zones and both are LOTL. See, from this area it picked up. Again, this is almost close. Maybe that's why software counted. This is second time. This is third time. But 5 times it is tested. Okay, before that here, these candles, it also considered. Okay. So multiple times it is tested. If that is the case, then within this 25 minutes, if you go to 5 minutes time frame, see here you have 5-minute zone. Because this is the origin. This 5-minute zone is the origin. This is the fine-tuned 5-minute zone. From this origin, maybe here with small entry buffer, your trade would have been executed. See, this is another successful trade. This is the third one at the time of this 25 minutes HLQ zone, LOTL zone creation. Actually, this is the origin. This is the area you should focus, this fine-tuned 5-minute zone. How much profit it has given you? Huge profit, right? This is the one. And this is the one. Again, on Friday, yesterday. From here, prices picked up and prices came down. And again, yesterday, end of the day. Again, it picked up from this 5 minutes. Because you are taking, this is the 5 minutes is the origin. Here you have a 5-minute zone. LOTL zone. This rally base rally is the LOTL zone. Exactly within this area. This has given a huge profit. This has given again good profit. This one again given good profit. This is how our high liquidity zones are working. Okay. Let me delete this fine-tuned zone time being. But how you fine-tune, you already learned in lesson 16, fine-tuning the zones concept. These 25 minutes, both these zones are LOTL zones. Okay, next 25 minutes is also high liquidity, and when it is created, this is 1812, 2024, 1440 candle. 1812, 1440, one base candle. 18.4 means maybe here, somewhere here. This is 30 December. This is 18. Probably within this 75 minutes, we have 25 minutes high liquidity zone. This is 15. Is it the 14? This is the one. 1355. When it is showing 1440. 1812, 1440. 1812, 1440. Where it is? This is 1440. Something wrong. Which time frame I'm? Sorry. I'm in 5 minutes. I didn't change the time frame. Going back to 25 minutes time frame. So this is 1812. This is 1440. This is the one. Yes. So this is the area. Rally, base, drop with hidden body. This is the 25 minutes high liquidity zone. That means inside 75 minutes, we have 25 minutes high liquidity zone is there. This is a 25 min high liquidity supply zone. So rally, base, drop. So we got a rally base drop, 25 minutes high liquidity supply zone. See, rally base drop. And it is a fresh zone, not a tested. Okay, next, what else you have? You have one more 25 minute zone, tested 5 times. This is a 512, 1350, one base candle. 512, 1350. This is 512. This is the one, 1350. Rally base drop. This is again 25 minutes high liquidity supply zone. See, once this high liquidity zone created, see, several times prices went and sharply came down again from here, sharply came up. Once again went, again came down sharply. Once again tested, came down sharply. After that, gradually moved down. And once again it tested and came down. But interesting thing, have you noticed? There is a daily supply zone and also 75 minute supply zone. For both these zones, this 25 minutes high liquidity supply zone is the origin. This is the lower time frame zone, 25 minutes high liquidity supply zone is the origin for this daily high liquidity supply zone. Daily supply zone. Same daily supply zone is also 75 minutes supply zone. So this is the area we have strong order flow. Excellent. So this is the advantage of drawing these zones. We know where exactly origins are there. We are able to trace with the help of these high liquidity zones. See, the normal zone horizon is powerful. High liquidity zone horizon is even much more powerful. Okay, next we have one more high liquidity, 25 minute supply zone. This is on 27.9, 14.40. 27.9. Here 27.9 is there somewhere here. This is the one, 27.9, 14.40. Here you have failed ERC maybe as a rally candle base drop. See, rally base drop. Failed ERC. Because it is failed ERC, it is a rally. If it is not a failed ERC, it could have been a drop candle. So that way here we have 25. This is a fine-tuned zone. This 25-minute zone is a fine-tuned zone inside 125-minute zone. Inside this 25, if you have a fine-tuned 5-minute zone, maybe it could be high liquidity or maybe it could be normal zone. It doesn't matter. A fine-tuned zone is always valuable inside a high liquidity zone. Supply zone. So we have drawn the high liquidity supply zones. Next we will draw high liquidity demand zones. See, when I am drawing these zones parallelly, you pause the video, and if you are also parallelly drawing these zones on your charts, then this analysis you get the maximum benefit. And also it is going to be a very good practice for you. Okay, this is supply zones. What about demand zones? The nearest demand zone, high liquidity, 11th. This is the 25 minutes demand zones. 25 minutes, I am focusing only high liquidity zones. So when it is there in 21.3, 14 hours. After that, one base candle. 21.3, 14.40. This is the one. A rally, base rally. This is a 25 minutes high liquidity zone. Maybe these high liquidity zones might be helping you identifying intraday trades. It might be helping you if you have fine-tuned 5-minute zone. Otherwise, this zone will easily violate. So what you have to do, after drawing, immediately go to 5 minutes time frame and check if there is any fine-tuned 5-minute zone is there. This candle, do we really need to consider as a base candle? Doubtful. This is a large candle, right? So that's why whether to draw the zone 5 minutes, there are higher chances zone may violate. Because the zone structure is not clear, or if you consider this is a base candle, how do you draw the zone? Rally, 1, 2, 3, 4, 5 base candles, type 2 proximal, you will draw. That way. See, now it looks like a valid zone. But only thing is, if you zoom, then you are getting some kind of doubt whether it is a base candle or failed ERC candle. That's why we have some kind of clarity is missing. So what is the solution? Several times I explained in HLQ analysis videos. It looks like a 5 minutes, but again, when you zoom, clarity is missing. In such kind of situation, what kind of decision you have to take? The 3 minutes demand zone could be a supplement to this 5 minutes demand zone. If 3 minutes structure is good, then you can plan your trade. So go to 3 minutes because 5 minutes clarity is missing. If 3 minutes also clarity is not there, definitely you can't take the trade. See? Definitely 3 minutes, it is a failed ERC candle. It is like a rally, 2 base candles, and it's like a drop candle. So that's why we can't plan a trade in this zone. It's dangerous. It may work, it may not work, but 5 minutes, fine tune 5 minutes point of view, it is dangerous. So better to avoid the trades. Let me go back to 25 minutes time frame. This is how you will take your decisions. Sometimes what will happen? Where we are? Yeah, here. Sometimes what will happen? Prices reach here. Now a new 5-minute zone will be LOTL zone will be created, not LOTL, because earlier structure is not good. A dynamic zone. Prices will move up. Next time in the retracement, again it will push the market up. That way you can plan the trades. When you have some doubt, better to avoid the trades in that zone. See, missing the trade is not a problem. But knowing the structure is not good, still if you plan and stopped out, that is a pathetic situation. Okay, any more 25 minutes demand zones? The next one is 16. You have 17.3, 14.15. 17.3. Okay, somewhere here. 14.15, here you have. 2 base candles. Drop, 2 base candles, rally with hidden body. Drop, base, rally. What is the low? 48, 331.55. This low? 48, 331.50. This is 331.55. So this is the lowest candle. Okay. This is again a 25 minutes high liquidity zone. And below that you have one more high liquidity. See, 17 tests happened in this zone. My God. Where is this zone? This is 5/6, 2024. 5/6 means that results, our general election results declaration next day. I think already we have drawn some 75 minutes high liquidity zone or 125. Yeah, here 125 minutes zone. Have we not drawn 75 minutes high liquidity zones? We have 25, 25, 25. I think 75 minutes demand zones we did not draw. We have drawn 75 minutes supply zones, but we forgot to draw 75 minutes demand zones. For a moment before drawing these 25 minutes demand zones, let me go back, change the time frame to 75 minutes and generate the chain. We will finish drawing 75 minutes high liquidity zones and then we will go to 25 minutes high liquidity zones, demand zones. So 75 minutes time frame, we have drawn supply zones, but we did not draw demand zones. 6th, we have a demand zone, 26.3, 13 hours. 26.3, 13. So somewhere here. So let me change time frame to 75. This is the one. So this is a 75 minutes demand zone. This is not a high liquidity zone, it is a normal demand zone. Okay. What is the next one? Next one is a 23, 13 hours, one base candle. This is the one, 23, 13 hours. Have a rally, base rally. See, this is exactly at weekly zone. See, at weekly EMA confluence, not weekly zone, weekly EMA confluence. The blue color line, weekly EMA, we have a 75 minutes zone. Suppose if markets are coming at this weekly EMA, we may get support. Exactly there institutions created a zone. And weekly EMA won't change easily. Because at least because the weekly candle should come. Until then, this zone is weekly won't move. Even if they move slowly, they move. So this is a 75 minutes normal demand zone, but having weekly EMA confluence. 75 minutes demand zone, having weekly EMA confluence. That is what. This is the reason why I have drawn these the EMA lines. Hope you understood why I have drawn these EMA lines. Okay. So what is the next? Next one is a high liquidity 75 minutes demand zone. This is a 23,915 two base candles. 18. LOTL zone. Okay. This is a failed ERC, like a rally candle with hidden body. It is a rally. 23,915. Is it 23,915? Yes. After that, these two base candles. So this is a LOTL zone. We have two zones, both are LOTL. The lower one is a high liquidity zone. Of course, the impact will be there on the upper one also, because it is LOTL zone. This LOTL is picked up the orders from this zone only, moved up. Of course, lower one is having a strong order flow because it is a high liquidity zone. We have two zones overlap, LOTLs. Okay, what is the next one? Next one is 19,3,915 four base candles. This is 18,3. What? 19,3,915. 1, 2, 3, 4. See, this is looking like some kind of a base candle, right? Actually, but see the hidden zone concept and hidden body. The moment it adds, this is becoming a rally candle. Big body it is getting from here to here. So that way this is considered. This is also a LOTL zone. Because the gap between the high liquidity zone and this zone is almost negligible gap. See, negligible gap. All three are LOTL zones. That means they added a lot of demand here. Institutions. This is a 75 minutes demand zone. In between these two 75 minutes demand zone, we have a high liquidity zone. Like a high liquidity zone is like a bridge between the first demand zone and the lower demand zone. Next, we have one more demand zone. This is 18,3,915 three base candles. This is 18,3,915 three base candles. So here we have again another 75 minutes, but this is inside the weekly zone. But it is not a fine-tuned zone, but it is inside the weekly zone. Fine-tuned means the 75 should be inside daily, both together should be inside weekly. That is fine-tuned. It is having only zone confluence with weekly, but not a fine-tuned zone. And below is a high liquidity zone. The 11th. This is 17,3,915 four base candles. This is the one. See, this is the rally candle. 1, 2, 3, 4 base candles. And then again hidden body rally candle. Inside this 75, we have 25 minutes high liquidity zone. Both are high liquidity. And this 75 is a fine-tuned zone. This 75 is inside the daily zone, and 75 and daily together inside the weekly zone. That's why this is a very powerful zone. This is a 75-minute HLQ demand zone. Inside 75, we have this 25 minutes high liquidity zone. Okay, next, what is the next one? You have again a normal 75 minutes demand zone. This is a 13-3, 10-30, 3 base candles. (13-3, 10-30) drop and 3 base candles, and this hidden body, with this hidden body leg out, we have again a 75-minute zone. This is also a fine-tuned 75 minutes. This is inside daily zone. This is a normal demand zone. So that means this daily zone is having 2 fine-tuned zones. See, drop, 3 base candles, again rally candle with hidden body. This is when it is, this is on 13th March, 10:30. See, 13th March, 10:30, 3 base candles. And what is the difference between this 75-minute zone and this 75-minute zone? Both are fine-tuned zones. But what is the difference? This fine-tuned 75-minute zone is a high liquidity zone. This fine-tuned 75-minute zone is a normal zone. That is the only difference. But both are fine-tuned 75-minute zones inside daily high liquidity demand zone. This daily high liquidity demand zone is inside the weekly demand zone. And any more zones? There is below one more, 12-3, 13 hours, 1 base candle. This is the one? No. This is the one, LOTL. Both are again LOTL zones. Exactly. See the low of this candle, 48,002 to 75. This low, 48,006. That means this should have been PRs, right? 12,313. This is 006. Okay, this is 002. Yeah, 002 is lesser. So that's why it is not PRs. Slightly, few points. So LOTL zone. But let us draw, because we should know both are LOTL zones. Almost the same. Sorry, 75 min demand zone, normal demand zone. But from this zone again another zone is created. Probably this zone get high liquidity characteristics, because new order flow will be added. But as on now, software did not identify this as a high liquidity. Maybe future it may identify. The significance of LOTL zones, it is a confirmation. New order flows are added into that zone, the lower time frame zone. So maybe this 13 may act as a high liquidity zone in the coming days. Here's a demand zone, 5 times it is pierced. Now you draw these zones and check whether there are any traps are available. You already learned pierced zone strategies in lesson 28. So let me stop here. Later on again you can draw in case all these zones are violated, at the time you can update this chart. because drawing too many also will take a lot of time, and also chart is looking like everything is congested. See, generally what you do if you are an intraday trader, draw few zones, that is enough. You don't go very deep. Once they are violated, draw 2 or 3 75-minute zones. Once they are violated, then again you go to the analysis, do the analysis again with the latest data. Okay, now I'm going back to 25 minutes time frame. Let me complete 25 minutes demand zones. 25 minutes supply zones we have already drawn. 25 minutes demand zone, only one we have drawn, I think. First one we have drawn. Somewhere here we have drawn 25 minutes. Yeah. This is the one I have drawn. When it is, this is 75. Let me go to 25 minutes time frame. This is on 17th March, 14:15. This is the one we have drawn up to here. Now 17th, while before drawing we realized we did not draw 75 minutes high liquidity zones or 75-minute zones. That's why we went to 75, again came back to this position. Okay, this is the one tested 17 times. When it is 5/6/2024. Okay, 5/6 means elections declaration day. Let me stop that level analysis at this point of time. In future, you can draw these zones once these levels are violated, because too much depth we are going. So now let me move on to the 15 minutes time frame. 15 minutes, you can draw normal zones also, but let me focus only high liquidity zones, because these 15 minutes high liquidity zones will be helping you for intraday trading point of view or short-term trading point of view. Let me draw few zones, reminding you they are available here so that you can draw on your charts. So I am generating 15 minutes time frame, supply demand zone chain. Okay, this is a 15 minute supply demand zone chain. Where is the first? Let me draw demand zones. If I don't draw demand zones, drawing supply zones and I am skipping demand zones. First, let me focus on the demand zones. 18th is the high liquidity demand zone. See, the normal demand zones could be, you please draw them. They could be a fine-tuned zones inside any of the 75-minute zones. So you should not miss drawing fine-tuned zones. So you please draw them. Why I am focusing supply demand zone and high liquidity zones? Mainly for short-term trading point of view and intraday trading point of view. They will be helpful. So that's why in my analysis I am focusing on them. So 18th high liquidity zone. This is on 19/3/2025, 15 hours. 19/3, this is 18, yeah, 19/3. Within this zone, any 15 minutes, 19/3, when it is 19/3, 15 hours. This is 19/3, 9:45, not here. This is the one. So inside 75 minutes demand zone, we have a fine-tuned zone, drop base rally, and that is also a high liquidity zone. So this is a 15 minutes high liquidity demand zone inside 75 minutes demand zone. Did you understand why I am drawing these 75 minutes demand zones even though they are normal? Because inside we have a fine-tuned zone. Some of those fine-tuned zones could be a high liquidity zone. This is drop base drop. Now what you have to do, you go to 5 minutes, time frame. Inside the 75 minutes, so draw 5 minute zones here. You have a drop, 1, 2, 3, 4, 5 base candles. That way you fine tune and draw the zone. And here you can plan your trade in this area. Suppose you are not convinced, this is something you feel, this is a ERC candle, if you feel like, go to 3 minutes. If you have any doubt on the structure. Now perfectly you can draw. See, 3 minutes, you have a zone. This is a 3 minutes fine-tuned zone inside the 15 minutes demand zone. This is a 3 minutes fine-tuned zone. Because if it is a 3 minutes fine-tuned zone, you can draw wick to wick. Sometimes you may miss the trade. Draw wick to wick. If you feel risk is high, at the time you can fine tune to type 3 proximal. Either way you can draw. I am just showing you. Now go to the 5 minutes time frame. Now check how the 3 minute zone looks like here. See, only this much is there. You can either fine tune up to here or you can draw full zone. See, now we have clarity on the 3 minutes. 5 minutes clarity is missing. Here you have real institutional order flow. So next time you can plan a trade when prices are entering into this zone. This is how you have to do. Okay, I'm just showing you one example, reminding you how to do a work like this. How you have to fine tune. Every time after drawing, go and fine tune. But I am not going and fine tuning because my time, video time is already exceeded than what we planned. So that's why I just gave you one example. But you have to do the remaining work. Okay, I'm going back to the 15 minutes time frame. In the 15 minutes, we have drawn one 15-minute zone here. This is the area. Now, what is the next high liquidity 15 minutes demand zone? 23. Yeah, so many demand zones are there. They could be, all these demand zones could be fine-tuned demand zones in one of the either 75-minute zone or 125-minute zones. So go to 23. This is 17.3, 14 hours, 5 base candles. Where is 17.3? This is 18.3. This is 17.3. (17.3), 14 hours. This is the one. After that, 5 base candles. 1, 2, 3, 4, 5. Then this entire thing is 15-minute zone. The same thing is already 25 minutes high liquidity zone. So what I can do, instead of drawing again, I can keep the same area is also a 15 minutes high liquidity zone. What is the next step you have to do? Go to 5 minutes time frame and check any fine-tuned zone is there. You draw. That way you can plan your intraday trades or short-term trades. That's it. Because high liquidity zones, intraday trading point of view, they give good profits. Okay, this is a 15 minutes, 17th. Next, what is the next? 25th. This is on 11.3, 14.30, 3 base candles. 11.3. 11.3, 14.30, 3 base candles, right? And then 12.3, 9.15 is the leg out. So this is the next high liquidity zone, 15 minutes. Now what you have to do, go to 5 minutes time frame, fine tune the zone. If the fine tuned 5 minute zone is a fresh zone, you can plan the trade, or if it is tested by any of these candles, you can ignore. Or if it created a new order flow in this area again, the previous one you can consider like a high liquidity zone, and you can plan one more trade next time. Okay, let us limit to this level. These are the demand zones. What about supply zones? 15 minutes. 10th one is the high liquidity 15 minute supply zone. This is 18, 12, 13 hours. 18, 12, 13 hours means somewhere here. Eighteen, 12, 13 hours here. 18, 12, 13 rally base drop. 18, 12, 13, 30. This is 13, 30. So let us draw the zone. The higher wick, this should be distal line. This is the proximal. So this is a 15 min high liquidity supply zone. After drawing this zone, what is the next step you have to do? Go to 5 minutes, fine tune in the 5 minutes time frame. If it is fine tuned 5 minutes is a fresh zone, you can plan your trade next time when prices are entering into this zone. This is the 15 minute zone. So here also same thing. Sorry, this is 25 minutes. Here also same thing. Go to 5 minutes, any 5 minutes fine tuned zone is there, you plan your trade. Otherwise, this zone will be violated. Okay. So what is the next one? The high liquidity zone, that is the 8th, serial number 8. That is 17, 12, 10, 45. 17, 12, 10, 45. Here you have a 15 minutes high liquidity zone. After drawing this zone, what is the next step? Go to 5 minutes, fine tune this zone. Next time when prices are entering, you plan your trade. And the next high liquidity zone and the last one is in 15 minutes on 5, 12, 14, 15. 5, 12, 14, 15. 5, 12, 20, 24. 14, 15, one base candle. This is 16, 12. 16, 5, 12 means somewhere here. This is 6, 12. 5, 12, 14 hours, 14, 15. This is the one. 5, 12, 14, 15. Almost the same as a 25 minutes HLQ zone. Rally base a little, maybe you drop to here, you will be drawing the zone up to here, 15 minutes. But anyway, the difference is small between 15 minutes and 25 minutes. So I just add the text. The same thing is also 15 minutes high liquidity supply zone. That's it. So what is the next step? Go to the 5 minutes time frame, fine tune the zone, and in the fine tuned area you will be planning your trades. If the fine tuned is also high liquidity zone, multiple trades you can accept until it is violated. If the fine tuned zone is a 5 minute zone, is a normal zone, if it is a fresh zone you can plan, if it is a tested zone you ignore the trades. This is exactly the same way how we are planning our trades in HLQ zone analysis video. Same concepts you apply here, nothing difference. So these are the 15 minutes time frame, and the last time frame is 5 minutes. I'm changing the time frame on the chart, 5 minutes. The reason if I don't change again, I will be searching in 15 minutes chart. Okay, now I will generate 15 minutes, 5 minutes supply demand zone chain. Okay, this is the 5 minutes supply demand zone chain. First, let's start with 5 minutes demand zones, high liquidity. Maybe, see, normal demand zones are also there. You please draw them on your charts. They could be fine-tuned zones in one of the high liquidity zones, maybe. If they are nothing, you can ignore them for your trading point of view. Always we give priority to high liquidity zones for our intraday trades from 5 minutes time frames. So go to 19, serial number 19 in this list. This is a high liquidity zone. When this zone is created on 26:15, what is the advantage of these 5 minutes high liquidity zones? Until the zone is violated, we keep on trading on these zones. That is the beauty of 5 minute zones. The remaining time frames you have to fine tune and then you have to take the decision. But 5 minutes not like that. Directly we take trade and we will, if it is a fine tuned zones, we have more confidence that the success of this zone. If it is not a fine tuned, it is an aggressive trade setup. As long as the zone gives you the trades, we will enjoy the profits. One day it will be violated, that day we get the stop loss. That is okay. The reason is our stop loss is always less than 2% of our capital. Okay, 26:3, 15 hours, 5 waist candles. 26:3. This is 27. 26 is here, this is 24. Okay, 26:3 means somewhere here. Yeah, this is the candle rally. 1, 2, 3, 4, 5 base candle and a rally. We can't plan a trade in this zone because the risk is very high. See this entire, because of this leg out, this whole candle, the leg out is very big. If it is having any fine-tuned 5 minute zone, somewhere here we can plan the trade. This is the area we will be using as a LTF zone, as an horizon. See, this is the horizon. In this area we will plan our trade, but not the high liquidity zone suggested here. High liquidity zone you can take. The problem is risk. You can't manage the risk. Risk is bigger than 2%. See, entire 75 minute zone risk. Are you going to apply for 5 minutes? No. Because here your 5 minutes and 15 minutes are same. Of course, this is a high liquidity area, no doubt. But the actual horizon, this is the one. That way you will be planning. But is it a high liquidity zone? Is it a normal zone? That we will see later. This is 24th March, 9:35, leg out. See the next one, 24th March, 9:20 is the leg in. That is also high liquidity zone. This is the one. 24th March, 9:20. And after that, 4 candles. 9:45 is the leg out. This is the one leg out. So software considered like this. The reason is the imbalance it is calculated from here. Maybe both are not actual leg out parameters. This is also might be medium size candle. This is also a medium size candle. But software got the confirmation in this candle. The imbalance is started. But clearly we can see, we apply our human intelligence. Even this is a rally candle, still I did not draw zone like this. I have drawn my zone like this. Why? Because I have seen the balanced area in this area. Then imbalance started. When we consider both, to consider this imbalance, maybe software might not have accepted. That's why next candle it considered. That's why everything it kept inside one zone. But when you are applying human intelligence, draw zone like this. This is the right area. Imbalance started from this candle and continued and moving up. So that's why, according to me, this is a valid zone. As per my experience, I'm saying. But computer's point of view, computer follows the rules. It can't apply the human judgment like that. See, always human judgment is the best judgment. That's why I always say fine-tune the zones manually. This is one of the reasons I tell you, while fine-tuning. Sometimes even software given zones also, I adjust the zones, the entry and stop loss in any way it is fixed. You can't adjust, but entry levels that I adjust to minimize the risk. Lesson 1 concept. What is lesson 1? Prices move in a narrow range when demand and supply are equal. First, lesson 1.1, you learn this point, a very important point. See, thus, as per that point, I have drawn this zone. Lesson 2, my favorite lesson. I always say, imbalance from where? Where imbalance start? When balance is broken. See, this balanced area is broken. Prices moved beyond that and started moving up. That means imbalance. Where is the actual candle imbalance started? In this candle. Maybe it is not a valid leg out candle. Maybe it is a medium sized candle. After that, follow through candles are there. Even then I consider this is. Why medium sized candle you are considering? Sometimes people will ask this question. The reason is the imbalance started from this candle. Time is over and the candle time is over. Next candle follow through continued. See how intelligently we are analyzing the chart and taking the decision. Such kind of analysis a machine cannot do. This is the difference between human brain and machine. Machine just follows the rules, that's it. But human, they applied the common sense. Some common sense we apply. Such kind of common sense, it's not easy we can't provide easily to the machine. See, already I provided some common sense to the machine. That's why it is identifying the zones, high liquidity zones. The only biggest problem for the human is human processing is very slow. But machine processing is very high. That way, by taking that advantage, we developed these high liquidity zone concepts. But those zones perfectly, risk management point of view, handling, we are applying our common sense. That way I drawn this zone. Same thing, machine also identified. How it identified? A rally candle, 4 base candles and a rally. Why this candle kept inside the base? Because it is a medium sized candle. But this is also medium sized candle. Why it considered this as a leg out? Because after that, machine is able to understand the imbalance started from this candle. Because this candle is moving, medium sized candle, but imbalance, this balanced area is broken and completely going. Why machine is not able to identify? Maybe machine considered all the 3 candles as a base candles, medium sized candle, while calculating whatever it came out of the zone, not sufficient enough to confirm it is a imbalance is started from here. Maybe some more move up is there. Machine might have confirmed this candle is the leg out. Maybe narrowly the calculation spot is missed out. That's why next candle it confirmed. But we as a human, I applied my judgment. Even though this is base candle, still I have drawn my zone like this only. This is good enough for me to understand the imbalance is started from here and continued follow through. See, this is the difference between machine analysis and human analysis. Human always we apply better common sense. See, this is a high liquidity zone. What kind of high liquidity zone? 5 minutes high liquidity zone. This 5 minutes high liquidity demand zone is the horizon for this entire 75 minutes demand zone. So next time when prices are entering into this horizon, definitely we can plan. And this entire 5 minutes HLQ zone is also a LOTL zone to this 5 minutes HLQ demand zone. But this is the area the real order flows are there. See, from here it picked up the orders and then only leg out formation is completed. That's why I'm ignoring this 5 minute zone. Moreover, this 5 minute zone occupied entire 75 minutes demand zone space. Due to that, risk management is not possible. So this is the perfect area where you can plan your intraday related trades. See, already it gave a test and gave you a successful, good profit it has given. Because those who looked into the report on 27th March, you would have identified this high liquidity zone. So that day, 27th March, you would have taken a trade here. So this is the one. Okay. And the next high liquidity demand zone, this is on 21st March 2025, 1450. 21st March 1450. Here, 21st March 1450. Is it inside this? This is 15 hours. 1450. This is the one. Let me hide the gap. You will get clarity. This is the leg in. This is the base, and this is the rally. Is that one? Rally, base, rally. Yes, RBR. 21st 15 hours, you have leg out. This is the leg out. So that way you have to draw the zone like this. I am drawing week to week, but while planning, you can plan a type 2 proximal depending on the risk management. Okay, I am not doing any risk management here. I am not giving you any trades here. I am just drawing the zones because I am not supposed to give you any trades. You know that because you already might have, I already told you how to read the disclaimer on each and every video description. Because I am not a CBA registered, so I cannot give you any recommendations. Only I am just providing you training how to use the software, how to use supply demand zones. That's it. But you have to find your actual entry, you have to find your actual stop loss, you have to find your actual target. That is the way you will be planning the trade. How to plan these kind of trades, the training already I provided in our training course. So this is a 5 minutes HLQ demand zone. See, whatever the analysis I am doing here is only for education purpose, not for trading purpose. The actual trades you will be doing. Trade planning is different. How to do trade planning that you already learned in our phase 1 and phase 2 training courses. Got it? So this is the 5 minutes high liquidity zone. If once the 25 minutes high liquidity demand zone is violated, you plan. Because already we decided this zone is not really, structure is not good. But institutions, see how clever they are. The moment that it is violated, they may use this 5 minutes HLQ demand zone as a trap. It is like a bear trap. This 5 minutes high liquidity zone below 25 minutes high liquidity demand zone. Okay, the next 5 minutes demand zone, high liquidity demand zone is 24th. Serial number 24, it is a high liquidity zone, already tested 2 times and 10 rejections from this zone, and that means tested 10 times. When it is 23,945, 2 base candles. 23,945, this is 21. 20 further below. 23. This is 19, somewhere here, yes, 23,945, 2 base candles and rally. You might have drawn a zone like this. Did you notice this zone is acting as an horizon to this 75 minutes high liquidity demand zone? Because it is having more risk. Slightly you can reduce the risk. See again, drop base rally, LOTL zone is created. Drop base rally. Picked up the orders from this zone. See the move, huge move it gave. It is created on 20th March. On the same day, it picked up the orders from this zone, and at the time institutions also created a 75 minutes high liquidity zone by taking the orders from this 5-minute zone, and then see how they pushed the market up. This is how institutions are playing, especially lesson 22 concept, lower time frame zone origin to the higher time frame zone. So this is a 5 minutes high liquidity demand zone. And these 5 minutes high liquidity zones, they will be helping you to get more success for our intraday trades compared to the normal demand zones. Of course, fine-tuned 5 minutes demand zones, again they give you good profits. Even the normal zone, but if it is a fine-tuned 5-minute zone inside any 15 minutes high liquidity zone or 75 minutes high liquidity zone or 25 minutes high liquidity zone, they will be helping you in giving better trades. Okay, the next 5 minutes high liquidity zone, the below there is one more. When it is created, it is already tested 7 times. This is again 19.3, 10.15, 4 base candles. 19.3, 10.15, this is the one. 1, 2, 3, 4, again rally. That means LOTL zones, right? Both are LOTL. This 5-minute zone and this 5-minute zone. Then risk management is very high. That's why you have to plan the lower time frame 5-minute zone only. You have to plan your intraday trades. We have a 15 minutes high liquidity demand zone. It is having a fine-tuned demand zone. Okay, you can plan a trade in the fine-tuned zone because there is a gap. If the fine-tuned zone is violated, the next horizon is this 5-minute zone. From here, you have to plan your actual trades. This 5-minute zone is the horizon for 15 minutes high liquidity demand zone. See here. Forget about this 3 minutes fine-tuned zone. The actual horizon for this 15-minute zone is, this is the source. From here it picked up the orders. See, it picked up the orders. Then the entire zone formation has completed. The 15 minutes high liquidity demand zone. So this is the area you can plan your trades. Already it tested 7 times. This is the 5 minutes HLQ demand zone. But before you plan your trade in this zone, at least one time you can plan your trade in the 3 minutes fine-tuned zone. It may give you at least one trade opportunity, may give you. Maybe sometimes it will violate. But possibility is there. So this is the 5-minute zone. And what is the next? Below there is one more high liquidity zone, a fresh zone, not yet tested. When it is 19.3, 950 candle, 4 base candles. 950. This is the one. Yeah, 1950, 1, 2, 3, 4. Maybe this is a tinny candle. That's why it kept entire thing. See, generally as a human analysis, we calculate drop base rally. But mission calculations are much accurate. Rally base rally. Okay, risk management point of view, you can plan up to type 2, or maybe you can further reduce. It's all up to you. But this is type 2. See how institutions, how clever they are. See, already they kept the 5-minute zone here. This is a 75 minutes demand zone. Actually, I am saying this 75 minutes Actually, this 5-minute zone is the origin for 15-minute zone. That is what I told you, right? Actually, this is also origin for this entire 75-minute zone. See here, you have a 75 minutes demand zone. This whole zone is 75. For this 75, this is the origin. This is not only origin for the 15 minutes demand zone, high liquidity demand zone. It is also origin for 75 minutes demand zone of this 5 minutes high liquidity demand zone. That's why it is powerful. Suppose any case, if this is violated, institutions kept a trap below this zone. See, below 75 minutes, you have a 5 minutes high liquidity demand zone. Mostly it will work as a trap, bear trap for this entire setup. That's why I am saying how beautifully they are keeping the order flows. That is what I am trying to tell you. But we are identifying, because we are doing this analysis with the help of our supply demand zone chain. Okay, let us stop with this. Okay, further you can draw. You have other zones are there, but let me stop my analysis up to here. Once these are all violated, then we can focus on the other trade setups. Similarly, let me go to the supply zones. All these are all demand zones. So this is the supply zone, 14th, high liquidity supply zone, 14th. This is 18, 12, 15, 15. Where is 18, 12? This is the area. Yeah, 18, 12. 15, 15. See here, rally, base, drop. See, this is inside a fine-tuned zone. Inside 25 minutes high liquidity supply zone. This fine-tuned zone is also a high liquidity zone. So you will be planning your trades from this fine-tuned area, which is also a high liquidity zone. So that this zone you can not only single test, multiple testing until it is violated, you will be planning your trades. Suppose if it is a fine-tuned normal zone, only one trade only you will plan. Until it become a high liquidity. Suppose it is testing multiple times, our software confirmed high liquidity. At the time you will plan multiple trades. But initially you will plan only one trade. But if it is a software confirmed it is a high liquidity zone, multi-testing automatically enabled from this zone. Okay. Next high liquidity zone, 5 minutes, 11th. 11th is a high liquidity zone. That is 17, 12, 11, 25. See, already tested this zone 2 times and both are rejections. 17, 12, 11, 25. Where is 17, 12? This is 18. This is 17, 12. 17, 12, 11, 25. Yeah, this is the one. Drop, base, drop. See, first time, second time. So this is a 5 minutes high liquidity supply zone. And here you have a fine-tuned zone. See here, rally, 2 base candles and drop. This is the area you plan. This is 17, 12, 11, 10. See, 17, 12, 11, 10. This is also high liquidity zone. Oh my God. This is also a high liquidity zone. This drop, base, drop. And this is a 5 minutes high liquidity supply zone. Inside 15 minutes supply zone. 15 minutes high liquidity supply zone. 15 minutes is a high liquidity zone. That is having a fine-tuned 5 minute zone. That fine-tuned 5 minute zone is also a high liquidity zone. The advantage fine-tuned 5 minute zone is a high liquidity zone. The advantage is from this zone you can take multiple trades. If it is a normal fine-tuned zone, you will take only one trade. Suppose in future, if the zone is supporting multi-testing and then our software confirms, then later on again you can take. But otherwise, many times the normal zones, fine-tuned 5-minute zones, they will be violated second time, most of the times. Okay, but this is a high liquidity zone. Excellent. The next high liquidity zone, we have two more. Fourth one is 27.9, 15.10. 27.9, is it somewhere here? Not here. Maybe somewhere here. 27.9, 15.10. This is the one. Failed ERC as a rally candle. You have 1, 2, 3, 4 base candles. 1, 2, 3 base candles. 3 are there? Yes, 3 base candles. See, rally base drop. This is a failed ERC as a rally software identified. Now you draw the zone here. Did you notice? This is 125. Inside 125, 25 minutes high liquidity zone. Inside 25 minutes high liquidity zone, we have a fine-tuned 5 minutes high liquidity zone. Five minutes HLQ supply zone. See the beauty. 5 minutes high liquidity, which is inside 25 minutes high liquidity, which is inside 125 minutes high liquidity. All are high liquidity zones. So this is the area will give you good trade opportunities. And the last one is 27.9, 13 hours, one base candle. (27.9), 13 hours. This is the one, rally base drop 27.9, 13, 20. This is 13.10. This is 13.20. So I have selected a wrong one. 13. This is the 13.10 leg in. 13.10 is the leg in. After that, 13.20 is the leg out. Now, did you see how beautifully institutions done? This is a LOTL zone. Sorry, this is a lower time frame horizon they created. From here, it picked up the orders, and then this entire 125 minute zone is created. So it is having a fine-tuned zone, and also it is having a horizon also, drop base drop. This is the 5 min high liquidity supply zone. See how beautifully institutions are creating all these zones. Either they are creating as a fine-tuned zones, or they are keeping at the lower time frame horizon as a lower time frame horizon to the higher time frame zone. See, these are the real trades we should not miss. And how you will identify such kind of, when you do your top-down analysis from monthly time frame until 5 minutes time frame, if you draw the zones, then you will identify such kind of. Sometimes these 5 minute zones are like using as a traps or horizon at even in weekly zones or daily zones or 75 or 125 minute zones. Sometimes even 15 minute zone, 5 minute horizon. So draw the remaining demand and supply zones. There could be some fine-tuned zones in one of the HLQ zones we identified. So this is how you analyze the chart, Nifty or Bank Nifty. Then you start planning your trades once prices are entering into those 5 minute zones. And another beauty is these 5 minutes high liquidity zones, they will be giving you profits up to 15 minutes target zones many times. I am not saying always, but many times. Sometimes any 5 minutes high liquidity zones, newly created 5 minute zones or newly created 1 minute zones, they may not be letting the price to reach your 15 minutes targets. But otherwise, many times 5 minutes high liquidity zone trades, so they will be giving you 15 minutes targets during the intraday. This is the main advantage of looking for these 5 minutes HLQ zone trades. We get more profits. So this is how, see, now it looks everything is clumsy, right? But okay, but when you are looking into the most recent price, what is the recently available, either fine-tuned 5 minute zone or your 5 minutes HLQ zone, that way, if you look into that, in between you will be planning your trades. See, here you have a 5 minutes demand zone. Here you will be planning your long trades. See, here you have a 25 minutes supply zone. Here you have a fine-tuned 5 minute zone. Here you have a fine-tuned 5 minute zone here, right? Let us draw that zone, fine-tuned 5 minutes. So this is a fine-tuned 5 minute zone. This fine-tuned 5 minute supply zone, we will be planning our trades. See, from here it came, how it came. Again from this, inside this 5 minutes demand zone, it picked up the orders, and again see how it moved. From here till this area it moved. See, the profits are giving from here to here. Now at present the range is, Bank Nifty is moving between these ranges. Let me draw an info line here. See, 730 points move. Bank Nifty is giving between these areas. Until one of these levels are violated, Bank Nifty will be moving in between. Maybe in between a new 5 minute zones will be created, high liquidity zones in the coming days. Later on they will be violated. Again they may move between these two zones. Until one of these zones are violated, the range will be within. Why we are saying here we have a 75 minutes demand zone, and also here we have a daily demand zone here. This is a daily supply zone, daily supply zone. And within this, these are the fine-tuned zones. This is the current range for the Bank Nifty. This is how you should understand the movement. This explanation I did not give in Nifty analysis video. Now I am giving you this explanation. The main advantage of doing this analysis is it will help you identify the immediate ranges for your next trading session. Intraday point of view, these ranges. Once these ranges are violated, the next level, here you have a high liquidity zone, automatically the level will be here. Suppose this demand zone is violated. Now your range will be increased up to here. The next trading day, again a new zones are created. Let us assume our next supply demand zone chain, any new higher time frame zones are created. At the time range will be adjusted between those newly created zones, higher time frame zones. But as on today, this is the immediate range. If this is violated, the range will be extended up to here. If this is violated, the range will be extended to the next one. Here you have a 5 minutes high liquidity zone till that area. So this is how you should adjust your ranges depending on the zone violations. But as on today, you have how many points? 730 points range is there. That is what happened, right? See what happened on Thursday 27th, 9:15. It picked up the orders from this 5 minutes high liquidity zone. And then it reached this fine-tuned 5 minutes high liquidity supply zone. When? On Friday 9:15. See the movement. See Friday itself, this is on Thursday, right? Thursday itself, see it gave a very good move. Okay. So this is how we should understand the situation. Hope this video will be helpful to you, especially now how to use Nifty supply demand zone chain, how to use Bank Nifty supply demand zone chain. You might have got a fair idea, I hope. Now, making use of this analysis, you will be planning your intraday trades or short-term trades. Of course, swing trades also you can plan by using this supply-demand zone analysis, but you should also calculate trends and all, price direction. That analysis also you should do. But many times HLQ zones will be working against the trends many times. Not always, but many times for swing trades. But intraday trades, we don't care about trend and all. We don't care about price direction. But swing trades, you have to consider them. They also plays the major role. Okay. So this is Bank Nifty supply demand zone chain. Mainly this Nifty Bank Nifty supply demand zone chains will be helpful for intraday traders and short-term traders. So this is the conclusion. So let's take a break here and we will continue with the next training session. Stocks near or inside supply demand zone side. After attending this session, your mindset will be changed. Now mostly you will think like a pro traders. Once I start explaining this concept, because you are not aware of these concepts yet, why I am generating stocks near or inside supply demand zone chains, especially the daily time frame, weekly time frame and monthly time frame. How swing traders will be making use of those zones and plan their long-term, swing trades. How software will be helping them for doing their own analysis. All these things you understand. I will explain some strategies related to this. So this is the end of the session. Thank you all for attending this lesson. Let us all meet again in our next video. Thank you.